Oh, look at there. Here we are. We are live. How'd you like that countdown?
I love that countdown. It looks like you put a little work into it and got creative over the weekend. You must have had a lot of time on your hands sitting in the AC.
Well, I would like to take credit for that, but Restream does all that for you. So thank you, Restream.
Thank you.
We are a couple of minutes late. Apologies for that. That was my problem. My situation was not working very well. This is me. Hi, everybody. Hi, I'm Bruce, and here we go. This is Ashley. You can
Hi,
find
hello.
find Ashley at dfwfriscohomes.com, and of course myself at bruceklinemortgage.com. But that's not what you're here to watch. You're here to find out about buying your first home. So, without further ado, Ashley, unless you want to say a couple words because we're going to try to get this done in 30 minutes.
I just want to let everybody know it's been a fantastic week. Lots of communication out there in the home and the interest rates. Everything's positive. Everything's great. And now is the greatest time to buy. And we are so excited to educate you tonight to let you know the steps. It's a process. It's not anything that you can say, hey, I'm going to raise my hand and get ready to buy next weekend. Nope, doesn't work like that. It takes a little time. That's why we're doing this for you. Bruce and I are here to help others earn and own the American dream so that you can build your financial legacy and your financial wealth. So thanks for tuning in.
Absolutely. Appreciate that. So that's why you're here. We're going to talk about buying your first home, or if it's been a while since you purchased and you're ready to get back into the market. We're going to go over um, how you can get your mortgage and understanding that process, because I know it can be a little bit unnerving at first. You don't know all the hoops and all the steps you have to go through. We want to go through that quickly here for you. We will present this online later to our different platforms. It'll be where you can see it streaming. You'll be able to pause, rewind, take notes, etc. If you have questions, you can just go in here and type us a message in the chat over here. If you want to just ask a question, we'll be monitoring that. And when we get to the end of this, we'll come back, circle back, and answer your questions. But thanks for joining us. If you're somewhere outside of Texas watching this, we can still certainly help you. This is just a basic guideline about how to purchase a home, the steps you're going to go through. So let's go ahead and get started. Thanks again for showing up. Thanks for being here. Now, here's the goals. We're going to learn the advantage of owning a home versus renting. We're going to explore the different loan programs, discuss the cost of being a homeowner versus, what being a renter. We're going to understand how credit scores affect your loan options. It's a big deal, but your credit score has a lot to do with the rate you get and how much you spend. We'll talk about that. We're going to teach you about completing the pre-approval process, because you want to get pre-approved before you go out searching for a home. And we're going to answer your questions, as I mentioned. So let's get right to it. So why should you buy instead of rent? Well, you would think it would be easily understandable, but listen, I know there's a lot of you out there, maybe you don't think you can qualify. A lot of you are renting and you're paying higher and higher rents, and it's just going through the roof. And a lot of you don't realize you can purchase for what you're paying for your monthly rental payment. And a lot of times you can purchase the down payment for your home in a lot of cases, and we'll show you, can be as little as what you're going to put down for a deposit on your next apartment or rental home. So listen, also don't need to tell you, but when you purchase, you're building equity. You're making an investment in yourself. When you're paying rent, you're just giving that to your landlord, right? You're not building anything for yourself. You're not building wealth. The way you build wealth for you and your family is through property ownership. That's one of the best ways to do it. We're going to talk about how your home tends to increase in value. You're going to build your equity. The interest you're paying on your mortgage payment is tax deductible. You want to talk to your CPA about that, but that's a good write-off when it comes time to do your taxes. Trust me on that. And you can personalize your own home. Something is to be said about being a homeowner, being proud of your home, a place to bring your family, a place, I can't say, hey, am I trying to go too fast? Ashley, is that what it is? I'm going so fast I can't say place. I say price. Sorry about that. So anyway, what I'm going to fix that. So listen, a place for you and your family for the holiday special events. And listen, a starter home, that first home, it's just a great way to get started. And we'll talk about a rate. You know, you can do an adjustable rate mortgage, get into a home right now for a lower rate, a lower payment. You can qualify easier to get in. That's a great way to get started. Start building wealth for you and your family. And really stop paying somebody else's mortgage. You're making your landlord wealthy. So here's the steps. Easy as one, two, three, right? Here's how you begin. You find your home team of experts. That's why we're here talking to you about this. It's what we do. It's what we do every day. And we understand that we've been doing this for years. We know the business. We're staying in tune with the business as the market changes. We understand what's going on in the market. So you'll have a lot of questions about that. Ashley is an expert on these different areas. When you're shopping in a different area, she's going to be able to get comparables, all the comps for you that you'll know exactly how much you need to offer for that home. And on my side of it, I'm going to complete that mortgage pre-approval for you. I'm going to find out how much you can qualify for. So before you go shopping, you don't go out and find a home, fall in love with it, and find out you can't afford it, right? So that's what the mortgage pre-approval is for. And then after that, once I get you pre-approved, you're going to consult back with Ashley, your real estate professional. And then at that point, then we're going to go into it. We're going to know how much you can afford. We'll start looking. You'll tell Ashley kind of what you're looking for. But here's the basic steps to home ownership, okay? The factors of your pre-approval. So it's your credit history. Very important. You all know that, right? It determines everything you do when you're trying to do finance. Your credit history. Make your payments on time. Your employment status, okay? Do you have a job? If you're just coming out of school, that's okay. If you're getting a job, a lot of people think, well, I'll have to have a job for 2-3 years before I can buy a home. No, not necessarily. If you come out of school and you get a great job and you get an offer letter that says you're going to make X amount of money per year or so much per month, we can use that letter to get you pre-qualified for a home. You can skip that whole rental thing, get your home right away, and start building wealth right away. We're going to look at your qualifying income. We're going to look at your existing debts, your credit cards, if you have student loan debt, if you're paying car payment, all of those types of things we're going to look at. And then we're going to look at your down payment. How much can you pay for the down payment? What type of loan program? If you're doing first-time home buyer on a conventional loan, it's only 3%, 3.5% for FHA, 20%. If you put 20% down, by the way, the best part is you don't have to put 20% down. That is a misconception. You hear that because 20% down simply means you don't have to pay mortgage insurance. So like with anything, you're going to get a car, you got to pay car insurance, probably paying a lot higher if you put less down on that car, or if it's a more expensive car. On your home, if you put 3% down, the lender has a higher risk, right? So you're going to be paying mortgage insurance until you get that down to 20% equity. But that's why you hear 20%, because if you put 20% down, you're not going to pay a monthly mortgage insurance premium. And we'll talk about down payment. We're going to talk also about the importance, like I said, number one, the importance of your credit history. Let's talk about it. So what determines your credit score? If you see in the green right here, it's new credit and types of credit. That counts for 20%. The length of your credit history, about 15%. The amounts owed, about 30%. And your payment history, so important, as you can see, 35%. So 35 and 30%, 65% has to do with how much you owe, okay, and your payment history. We can oftentimes help you with your credit score. Sometimes there's ways we can do this very quickly while you're shopping for a home. And we don't have to wait 30 days, 60 days for it to recycle. We can go in there and go, oh, if you pay this debt down to this amount, or if you get rid of this collection, this thing here, you're going to get 20, 30, 40 points. But the reason I mention this, your payment history, can't do anything about that. If you have late pays, they're not going away. So whatever you do, make sure you make your payments on time, because you can see right there, 35% of your credit history is weighted there. Moving on. So the importance of your credit history here is, let's talk about some important notes here. The reason it's so important about making your payments on time, as you can see right there, a history of making monthly payments on time indicates that you are likely to make your mortgage payments on time. That's why you get 35% of that. If they see a history that you make your payments on time, you're a good candidate for a loan. That's what they're looking for. And like I mentioned earlier, your credit score can be a factor in the type of mortgage you qualify for. So the higher your credit score, the better loan program you'll get, right? Conventional loan, you're going to get a better rate. It's going to probably cost you less in loan costs. So, we're looking at the better scores for better pricing, but don't let that deter you, because we have programs to get you into homes as low as a 580 credit score. Okay, so we can work with you on that. And let's say your score is a little bit on the lower side. Don't let it deter you. Like I said, we've got ways we can help you improve that quickly. And at least we're going to start you on a path, a roadway to success, to help show you how to get there in 3, 4, 5, 6 months. So you'll have a plan. But right now, if you're just thinking, well, I need to pay this down, don't do that. Don't go out there and try to fix your credit on your own, because here's the problem with that. Credit bureaus look at certain factors. You might pay off a debt that will actually lower your score. So I'm telling you, before you start diving into your credit and thinking, oh, before I call a lender, I'm going to fix my credit, let's look at it first, because I'll have some ideas for you that will help you. And we're also not guessing, because it's going to show me, pay this, pay this, pay this. It's going to show me what you can do to get a better score. Takes the guesswork out of it. So don't do that. And like I said, it's going to determine how much you can put down, how much you can borrow, and the interest rate. So also, it says here you can obtain a copy of your credit report from your lender. Actually, that's going to get mailed to you within 30 days after your loan application. The reason I can't give it to you is because it's paid to a third party. That third party vendor will send it to you. You'll see it. It will come in your mail. And I can also give you the information so you can reach out to them if you have any questions. So, as I mentioned before, how much do you need for a down payment? The good news is it's not 20%, 3%, 3.5%. And as you see here right in the middle, some home buyers may be eligible for down payment assistance. That is a thing. Okay, so there are certain agencies out there in the state of Texas and many states around the country that offer down payment assistance. And you would be surprised how much income you can make and still qualify for down payment assistance. And the reason for that is, let's say you're a single mom, a single father, something like that's causing you, maybe you went through a divorce, maybe you just paid off a lot of debt in the last year, whatever the reason is, you may not have a large chunk of change sitting in the bank. You might not have 5%, 3%. You might not have thousands of dollars there. But again, don't let it deter you, because with one of these programs, you get down payment assistance. You don't have to have thousands. Like I mentioned when we started this, you can literally get into a home as a first-time home buyer, and even not a first-time home buyer, with down payment assistance for as little as the cost of putting down a deposit for a rental. Think about that. So then when you start making your payments, they're not going to make your landlord wealthy. They're going into your home equity that's saving up for you. So here's another important thing here. If you see in the green, be prepared for closing costs that may include the title fees, your home inspection, the appraisal, attorney fees, recording fees. These are all loan costs that are not part of the down payment. So let's say you're doing 3% down. There's still loan costs involved. So that 3% can easily turn into 5, 6, 7%, depending on your rate, the cost for the rate, the cost of doing business for the loan, and the title fees. So you want to have that, and you want to be clear with us and let us know, exactly how much you want to spend, what your credit looks like. We can look at that. If you say, I know I want to spend X amount for a home, then I kind of work backwards with you, and we look at all your debts, and I'm going to show you a complete loan estimate. It's going to show you all the costs. It's all broken down for you. It has to be. It's there by law. So there's no hidden fees, no surprises when you go to closing. Checking in with Ashley. How we doing? Ashley, how we doing? All right.
You caught
Bless
me.
you. I
You caught
got
me
you. I
when I
caught you.
sneezed. Right there. You're doing good. We're just
God
3 minutes
bless you. All
behind
right.
schedule, but you're I can tell you're the micro machines man. You're running through this, but in a very clear way. So
Mm.
you're doing great.
Good. Good. And remember, you guys can always go back to this, right? You can go back, you can check this out and don't, rewind. So, how much can you afford? Huge question. You've got to know this before you start shopping because there's nothing worse than falling in love with that home and then coming back and going, oh my gosh, I don't have the money. I can't afford that property. So, I'm going to look at your credit history and we're going to come up with what is called your debt to income ratio. Okay. We like that to be around 45% for conventional, 55% for FHA, and sometimes higher. VA can go higher. Um, Typically, that debt to income ratio is the anticipated total housing payment. So your new payment plus whatever your existing debt payments are. So if you got a car payment, student debt, credit card payment, all that divided by your gross monthly income. So your expenses divided by your gross monthly income. We want that to be 50% or better in most cases. And again, if you have excellent credit, it can go higher. If your credit is a little on the weak side, that number may be a little bit lower. So there are many factors that go into that. And like I said, the certain programs offer different qualifying guidelines. Okay, so if you, like I just mentioned, if you got great credit, you might have an expanded debt to income ratio. Okay, so you want to know, okay, get pre-approved so you know how much you can afford. And that's what I'm here for. It's very easy to do. We'll show you here at the end of this, where you can just use our app right there on your phone, fill it out quickly. It comes straight to me, and I qualify you quickly, get that pre-approval letter out. So what's included in your mortgage payment? So a lot of you, if you're first time home buyer, you don't know this. So let's go over it quickly. Principal, that is the amount you're paying back. That's the amount of the loan. Okay. So the amount of the loan amount you take out, and then your interest is what you're paying to the lender. So whatever the rate is, 5%, whatever that rate is, that's the interest rate you're paying monthly to the lender. So principal and interest. Then you've got your property taxes. Okay. Property taxes are determined, it's different in different counties. So it includes your school taxes too, your local taxes. So that can vary depending on what county you're purchasing in. But I'll be able to look that up and give you that number. And then your homeowner's insurance. So that's your hazard insurance that you're going to be required to purchase. You purchase that up front for 1 year, and then you're also making monthly payments to it. So that payment includes your principal, interest, taxes, property taxes, and your homeowner's insurance. You're also, if you don't put 20% down, there's another type of insurance, and that one is your mortgage insurance, your private mortgage insurance. Okay. Now, big question, which type of loan is right for you? A lot of you, you don't know. You've heard about conventional, you've heard of FHA, you've heard of VA. Those are the major ones. If you're a veteran, God bless you. Thank you for your service. Please take advantage of that. Okay. That is a great loan program, zero down, and you don't have to pay mortgage insurance on that. So that's a great program. Um, First time home buyers often are going to be conventional or FHA. If your credit score is say 680 or better, I'm going to be looking at conventional. Okay. Conventional loan is basically classified as a loan that is not insured by the government. It's not a government loan. So these loan programs are Fannie Mae, Freddie Mac. Okay, they're backed by Fannie Mae and Freddie Mac. You may have heard of those. Now those, as I mentioned earlier, are going to require a lower debt to income ratio threshold. 45% is about as high as they'll go. So 680 credit scores are better. I really like it better, especially right now if you're up around 700. Again, we can help you get there. We can find a way to help you get there quick to improve your pricing. And again, that mortgage insurance can be more expensive if you've got a lower credit score. Also, the less you put down. If you're putting down 3%, Mortgage insurance premium monthly is going to be higher than if you're putting 10, 12, 15% down. That number drops. Again, because of there's less risk to the lender, so it's a more attractive loan, right? All right, let's move forward. And on conventional loans also, this right here tells you the conforming loan limits. You're not going to be buying a home. If you're a first-time home buyer, hey man, more power to you if you're buying a home over 647,000. And the jumbo, it becomes a jumbo loan above 647,200. There's high cost areas, California, New York, some other areas. It is going to be a fixed rate. Now, I'm not going to talk about the adjustable rates here, right here. That would be part of what I discuss with you when we go over the loan programs to see the best fit for you. And I just will mention briefly, if you see adjustable rate down there, used to be people had a bad taste in their mouth after the mortgage crisis, but they weren't really the adjustable rates that were the problem. It was more the balloon type loans where all of a sudden it becomes due in 3 to 5 years, boom, your whole loan is due and you don't have the money, and people were just getting loans, so they didn't know what they were doing and they were really taking advantage of it. So now we have so many guidelines that make it more difficult for you and more difficult for me, but it's good because it really does protect you. But that adjustable rate, the reason it can be great, especially since we're seeing more rising rates lately, is let's say you were looking at a home a few months ago and the rate was here, but now the rate's here. That means your buying power decreased, right? Because if you were going to spend, let's say you were buying a home and you had an $1,800 a month payment. Well, if the rate went up a point, 2 points, that $1,800 payment's now $2,200, $2,300, $2,400. And all of a sudden you're like, oh, I can't afford that. And you may not qualify now because of your income, right? And so you may have just lost out on that. But here comes the adjustable rate part of this. We get you into that introductory rate, a lower rate, getting you closer back to that original payment you expected to make, okay? That can be a 5-year, 7-year, or 10-year adjustable rate period before that rate adjusts. And by the way, it doesn't have to adjust up. It can adjust down. So let's say 5 years from now, if rates are lower than they are right now, your adjustment is going to go down. So listen, it's a great way to get into your first home. And it also can save your deal. If you it gives you more buying power. You can buy a bigger home if you have a less rate, right? Because you have more spending, more room for spending there with that lower rate. Now, the unconventional loans, these are ones that we talk about that are insured by the government. These loans are going to be your FHA, your USDA, that's United States Department of Agriculture. I was getting Drug and Food Administration stuck in my whatever reason. Sorry. So United States Department of Agriculture. I can tell it's after 6 here, Ashley. And then also your state bond programs, and that is going to be the down payment assistance programs I mentioned. All right. Now the VA, great. Again, veterans, thank you. Please take advantage of that because there's no down payment, there's no mortgage insurance, and there is a funding fee. We won't talk about that here. That gets rolled into your loan if you have to pay a funding fee. But if you're a disabled vet, that fee is waived if you have 10% or more disability. All right, moving along. Now, which type of loan is right for you? This is why we have that initial conversation where I talk about your debts, I talk about your income, I talk about your history. So many things factor into the right loan program. Okay, so all of these different programs have a wide range of finance and down payment options. So the interest rate, everyone talks about interest rate, but it's only one component, all right, to obtaining that ideal mortgage for your particular situation, as we talked about with the adjustable rates. Because let's say you take advantage of one of the down payment assisted loan programs. Let's say that assisted loan gives you $12,000 down payment assistance. You get to keep your money in the bank, or perhaps you don't have that money. The interest rate is higher. Okay, it's going to be higher than if it's conventional or FHA without assistance, but it's getting you into the home. You're no longer renting. It gets you into the home. You can always come back and refinance that into a lower rate later. But now at least you're a homeowner and you are moving forward, building wealth for you and your family. So it's work with me and Ashley, work with us because we can help guide you. We can look at your budget, talk about your goals, and then show you an array of options. All right. So you can decide what is the best fit for you and your family. Now let's talk about the process. This is what goes into it. There's 6 basic steps. Okay, so here's the meat. Get your pen out, take some notes. All right, so step 1, complete the loan application. We have a co-branded app. It's a mobile app. We'll send that to you right there on your phone. It's very easy. Step 1, step 2, step 3. It's asking your name, your address, it's asking for your income, your job, etc. Take you 10 or 15 minutes to sit there right on your phone. You can even upload your documents to this. No need for a scanner. Don't drive to my office. We're going to do 99% of this right there on your phone. It's super easy, user friendly. You're going to love it. So right there, you can upload your income and your asset documentation. Then I can get you that pre-approval letter that I'm going to share with Ashley and you. And now you can go to step 2. So we're going to review the pre-approval with Ashley. Here's how much you're qualified for. And we're doing this type of loan with this much down. And then together, you guys are going to formulate a plan to see homes that fit your budget and your needs. Okay. Step 3, after Ashley sent you a list of properties based on the price and based on all the things you told her that you must have in your dream home, she will send you those. And then you can look at those and have a discussion about when you want to schedule and go see those. Stay focused on it. Don't get discouraged. Properties are coming and going all the time. So, if you see something, you hear something about someone selling something that at work, they're talking about, it's not on the market yet. Boom, make sure we know about it. Stay in touch with us, engage with us, and then let us know because we want to stay in contact during this period so we can find the right property. Step 4, once you're out shopping and you're ready to make an offer, you find that home you love, you're going to discuss with Ashley the price. What should that home sell for based on all the homes that have recently sold that fit that criteria? And she's going to say, listen, if you want that home, my recommendation is this, and here's why. She'll fully explain it to you, and it's going to make sense of why you're going to offer that amount, what your offer looks like. Okay, and then they're most likely going to check with me. I'm going to go, yes, I've already pre-qualified them. Excellent credit. They're ready to go. And then once you do that, you have that pre-approval letter. She writes up your contract. Actually, will write up that contract and submit the offer. All right. Once your offer is accepted, you're going to give an earnest money deposit. All that is that's just think about a deposit you're making on an apartment. It's your down payment. You're going to make that deposit. They're going to put that into an escrow account until you close. So it basically puts that home on hold for you. Okay. You're under contract. It's going to stay there. Step 5. Now you're under contract. You're going to speak with me, and I'm going to send you a link. You're going to order that appraisal, and you can put that on your credit card. You order the appraisal. The appraiser will contact the seller, get that scheduled. Once we get the appraisal in, we're going to update all your documentation. You're going to buy homeowners insurance. We're going to get all of that in your file, and all of that gets reviewed by my processor. So it's me, my loan officer assistant, my processor, and underwriter, all in-house working together on your loan, okay, which also is excellent, makes it easy. We can get your loan under contract and close within 15 days, okay, if the seller wants to move out that quickly, but we'll talk about that later. Now, after you have I've gotten all your documents, we finally get final approval. The underwriter is going to give us final approval and clear to close. Now, I'm going to send you your closing disclosure. Okay, you'll hear us talk about the CD. We got the CD go out, closing disclosure. All right, you're going to review it, and then you're going to sign it. We can close as soon as 3 days after that, right? And that's when you're going to hear from the title company and Ashley and myself. We're going to make sure we get that scheduled for you at the title company. You're going to attend the closing, sign the documents, and get the keys to your new home. and then we're going to celebrate. Are we going to celebrate? I've got to check in. I'm making sure you're still there with me. Good.
We are going to celebrate by opening a bottle of champagne or
Boom.
cider, and and we will just cling some glasses together and celebrate a journey well earned.
Absolutely. And then what happens? Well, we're going to recap. We're going to recap. You want to recap? So basically, if you're just tuning in, if you're just getting here, this is what we talked about. If you can rewind, go back, fast forward through stuff you don't need, but these important parts, go back and view these, take some notes, and call me, call Ashley. Let's talk about it. We talked about owning versus renting, why owning is better. We talked about the pre-approval process. One thing I did mention about the owning versus renting, I'm running out of time, is there are differences. Now, if you've been renting for several years, you own your home, guess what? Your air conditioner goes out, your water heater breaks. You don't call the office anymore and go, hey, come fix this thing. No, now it's on you. So you're going to have a team. You're going to want to know your different team. Who's your AC people? Who's going to come fix your water heater? You'll have a team. We can help you with that too. That's the only big difference. I recommend you get, it's not the homeowner's insurance, a home warranty that will cover items in your home like your air conditioning. If you have a pool, you can get things on your pool covered. Your water heater burst and you've got to have it fixed. That's what those home warranty companies are for. You're going to hear a really lot of bad information about home warranty companies. Research those out. Ask your friends, ask your family. Do your due diligence before you get one of them. But I do recommend that because, your washer, dryer goes out, oven goes out, refrigerator. If they can't fix it, they'll replace it, and that can save you thousands of dollars. So we talked about your credit report. We talked about your down payment options. We talked also about your closing costs and how you got cost over just your down payment. So make sure that you account for another about 3% of what the loan amount is for your additional closing costs. Talked about the different loan programs. Talked about what goes into your mortgage payment, your principal, interest, taxes, and insurance. And we talked about the 6 steps in the home buying process. So I hope that you guys found this helpful. I'm pretty sure you did. If you are looking to get your questions answered about purchasing your first home, purchasing an investment home, purchasing a vacation home, a second home, we can help you with all of that. This is primarily about those folks who are the first-time home buyers who have questions. With that, do we have any questions? Is there anything out there? Ashley, you have anything?
So I've got a question from a first-time home buyer who is asking, you keep talking about homes. I didn't really hear you say anything about condos and townhomes. And just to let everyone know who's listening, the majority of the purchasers that are out there right now are our first-time home buyers are millennials. And millennials, in my opinion, because I was once a young buck way back then also when I bought my first place. And I looked at it and thought, do I really want a yard? Do I really want the upkeep of like working all week and then coming home? And then I got friends. I got to go out. I got to go dancing. And then on Saturday morning, do I really want to mow my yard? So that's when I looked into buying a townhome and a condo. And so I actually own a condo, and it was a great investment for me. In fact, I still have it. And it was a great investment because I didn't have to take care of the pool, but I had a pool. I didn't have to take care of the garage, but I had a garage. I didn't have to take care of the yard, but I had a yard. So, condos and townhomes are a great investment for a first-time home purchaser because there's plenty in the Dallas area. We know we have listeners listening from all over, but primarily Bruce and I are in the Dallas, Frisco, Fort Worth areas. And so we know the market over here that does exist with condos and townhomes. So I just want to remove any sort of, negative. I don't know why you would have anything negative about it, but I've just heard some people go, I don't really know about a condo. I don't really know about a townhome. And, at the end of the day, it's much more affordable, and it probably is parallel with what your income is bringing in, and it's going to give you an opportunity to enjoy maybe a more urban area in which you get to work and do business and play in. So townhomes and condos are an excellent way to create generational wealth. And then when you move into a new stage of life, or get married, or have children, or decide to have 5 fur babies, then maybe we'll look into a yard. But then your rental, or I'm sorry, your condo can always act as a rental or a source of income coming in. So
Yep.
yes, forgive us. We've only been talking about homes, but a home, in our opinion, also is condos and townhomes. And Bruce and I have been selling and borrowing against those for many, many years. So thanks. That was a great question.
Absolutely. And yeah, I didn't touch on that, but that you made a great point. And a lot of starter homes wind up being rental homes for someone because let's say you've been there 4 or 5 years, you've built equity, the home's worth more now. You're going to take out that the equity to buy your next home, but you can keep that one. All right, keep that home, put a renter in it, and now you've got people paying for that mortgage while you're paying for the other one. So that's what a lot of people do. That's how many people get into their first investment home. So yeah, great point, Ashley. Anything else? I don't think you're on. I think you're muted. Maybe I can't hear you. Maybe
Oh,
it's
I'm
just
on
me.
mute.
Oh,
I
there you
just
go. Okay.
realized I'm on
All
mute.
right.
No, we don't have any more questions. I just
Okay.
we're getting a lot of likes and comments and thumbs up in the
Perfect.
box. So
Awesome.
thank y'all so much for that. We appreciate it. We hope that this is an item of value. We only want to provide that for you, and we both have Calendly links that are available. We've got some certain time slots that are available for this seminar only. And yeah, just if you're driving, we know some of you are. We know you can't do the, clicking on the QR code. So just snap a picture of our screen, go back to it. You'll probably forget about us tonight, but tomorrow
Right.
when you're going through your photos, take a look at us and throw us in your Rolodex and put us on your list of top 10 things to do in the next week. So thank you
Right.
so much.
We just want to help. Listen, it's what we love. We're passionate about it. And if you are wasting money on rent, if you're self-employed and think you can't afford a home, I come from a music background. I have so many friends in the music business that have been doing this for decades. And you've got history of income. We just have to show it. We can show it. And I can show you how. So stop renting, start building wealth for yourself. We want to help you get there. Thanks for taking the time out of your day. We do this every other Tuesday at 6 p.m. Central, right here streaming. So if you missed this one, again, you can catch it on a replay. But send your friends to us. If you know some friends and family members who are looking, they're thinking about buying their first home, please recommend us. Send them our way. We'd love to help. Thanks, Ashley. Everybody have a great one.
Back on July 26th at 6 p.m. We'll be right here. Be here or be square. Thanks, Bruce. It's so fun
Fantastic.
to see you.
You too. See ya.
Bye.
Bye-bye.